Thanks, Dave. Thanks, everyone, for tuning in this afternoon, or if you're watching it sometime in the future, thanks for being here. I'm going to talk about E-mini futures trading today, specifically day trading, and specifically off of the 1-minute chart. However, the concepts and various entry, trade management, and exit techniques that I'm going to talk about can be applied to different markets and different time frames. So if you're trading a different time frame, or maybe you trade the NQ or the currencies, or perhaps crypto, you can take these concepts and apply them to your market, your time frame. You could also take pieces of what I'm going to talk about, the different techniques, such as just, let's say, the trail stop technique that I use, and apply that to your trading. So you can break it down, you can use the whole thing, or pick and pull different pieces of it and apply that to your trading. So I've been a trader for many years, going on 15 plus years here, and I definitely consider myself a pro. Been doing it for a long time, full-time trading for a long time, and the 1-minute chart, specifically for trading the futures markets, is very effective. And we'll get into all the details of that, as well as kind of some bigger picture concepts that apply kind of generally to trading as well. So got a lot of stuff to go through. We won't waste any time here in the next 30 minutes. So we're going to go over 3 trading techniques that you can use, starting tomorrow if you want. I'm going to go through the 1-minute chart and some specific candle types that are most likely to get momentum. So when you see these candles set up, these patterns set up, you can kind of be alerted that, yeah, this setup or this candle is more likely to get a move following versus, a different type of candle. And for anyone who's looked at, the markets in what we would consider the after-hours session, like the Globex session, compared to the NYSE Open, compared to the European Open, compared to the close, you can see these different periods of slow movement compared to lots of momentum and lots of movement. So being able to identify those strong momentum areas is really helpful. We're also going to talk about the high of low bar, low of high bar entry. I just coined it HLB, LHB. And then we'll talk about, we'll kind of go from entering, managing, and exiting the trade, but specifically, I want to highlight the trail stop technique that I use both for intraday trading and for swing trading as well. So, I like to do a little bit of both, day trading and swing trading, primarily day trading, but you can take the concepts and apply the techniques to, like I said, different time frames as well. And so, this style of trading is really beneficial if you want to have a lot of flexibility and kind of build towards that financial freedom in your life. I don't sit in front of the screen all day long. I'm really just focused on the NYSE Open, the first 90 minutes of the day. You certainly could trade different times. The close is a really good time to trade. The open is the best time. That's where the most momentum and the most trading volume and activity is occurring. The close is pretty good as well. Middle of the day over lunchtime, not so great. After the market closes, after that NYSE session closes, also not so great. The European Open, that's another more active time. Pre-market can be all right as well, like the hour to an hour and a half before the NYSE Open. And so if you can focus in on, a specific time frame, ideally around the NYSE Open, that frees up the rest of your day to do, other things. If you like to golf, or you got grandkids or kids that you like to spend time with, spouse, things like that. So, you can make a full-time income from part-time work in a sense. And I know a lot of folks are coming from different backgrounds. You got, people who are already retired from one end of the spectrum, and then people that are, college kids. I got started when I was really young in college, and there's benefits on both sides. If you're in the middle and you're, 30 years old with a family and a mortgage and a full-time job, you can still, depending on what time zone you're in and what your day job might look like, you can still learn the techniques and develop as a trader by just trading, an hour or 2 hours in the morning each day. And so if you can build some of that consistency into your schedule, it becomes a little less daunting to feel like, okay, I've got to quit everything and do this. In order to do this full time, I have to quit everything and go, guns blazing, sit in front of the screen for 10 hours a day and just focus on trading. So you don't have to take that approach. So for those that are unfamiliar with myself, before we get into kind of the meat and potatoes of the trading techniques, I got my start trading in the Chicago area. I grew up in the Chicago area, so I had a lot of access to both floor traders, the trading pits, kind of that old school way of trading, as well as some traders who'd been trading on the screen since like the 1980s. Thinkorswim was based out of Chicago. Infinity's based out of Chicago. Those are the two platforms that I kind of got started on. Tom Sosnoff, Don Kaufman, a lot of those guys who were kind of the core of Thinkorswim in the early 2000s, coming out of that post tech bubble era. And so I got my start actually swing trading, but then after a couple of years, I did start, I kind of shifted or added in the day trading. So I really got, 04, 05, kind of started being interested in trading and your typical paying more attention to stocks and things like that. But then in 2006 is I really kind of got going. So I've been doing this for a couple of years now, and like I said, my primary focus is day trading the E-mini futures, specifically the ES. And in addition to doing these types of presentations, I've had the pleasure to speak at a whole bunch of traders expos and at the CME and Money Show and things like that. So it's kind of in some ways comes full circle. I had some really good mentors that helped me kind of shepherd me, if you will, and I had a friend of mine. We were both kind of the same age, starting our trading journey together, and they kind of took us under their wing and showed us the ropes. And so trading is a very individual pursuit. And so being able to kind of do some of these presentations and being able to package your ideas really helps bring clarity. And that's kind of how just as a sidebar, the EminiMind, what started as a blog, was just a way for me to clarify my ideas on paper or on the web, if you will, digital paper, and then just by nature of the mid 2000s and kind of that blog era, it led to other traders finding me online and asking questions, and then you'd start discussion, and then that's what kind of turned into EminiMind today. So I'm primarily a trader, and then do the EminiMind thing here as I guess as a bonus, if you will, side project. But outside of trading, I spend a lot of time outdoors, avid mountain biker, explorer. I like to, originally, like I said, from Chicago area, and then now I live in Scottsdale, Arizona for about 9 months of the year, and then go up to, we have another place in the Black Hills, South Dakota, and go up there in the summer when it's blazing hot here in the summer. So it's great if you can, structure your life in a way that you get a lot of time away from the screen. As counterintuitive as that might sound, when you're trying to focus in on becoming a trader and you want to look at charts all day long and spend all your time in front of the screen, but most of my light bulb moments and when things click was always when the markets were closed, when I was reviewing trades at the end of the week on a when I was young, it'd be like Friday night, Saturday night, going through trades, looking through my notes, going on a hike or a bike ride. Those are the times where things really click. So I'm a big proponent of getting outside, especially going for walks, hikes. You don't have to make it a huge, endeavor. It can just be going for a walk around the block. But those kind of things are really, really beneficial for bringing that mental clarity to your trading. I'm also an ASU Sun Devil graduate, so go Devils. And let's dive into kind of the meat of what we're going to talk about here today. So the first thing is chart setup. And I mentioned earlier, I use Thinkorswim. You can use whatever platform you want. I've used Thinkorswim since day one. Their charts are beautiful, and I like to keep things really clean. And it's just kind of nice to have all my accounts in one place. So for the most part, all of my trading is done. Charts and things are on Thinkorswim, and then I've used Infinity Futures in the past, and the last 3 or so years, I've used Tradeovate more for my futures trading, just the execution, so just the trade ladder, and then I'll do all my charting here on Thinkorswim. But the Thinkorswim Active Trader has gotten better. Actually, the Active Trader itself is very user friendly, and I really like the way it works. 15 years ago, the Thinkorswim futures platform wasn't that great, but it's gotten a lot better. So this is my basic chart setup: the 1 minute chart, some tickers on the left, futures and the indices, and then this bottom chart is the NYSE tick. Not going to get into too much detail on that here, but just so you can see my chart setup. I do use 2 monitors. The second one is where I have like my Excel trading journal and then the trade ladder, but for the most part, I could trade off of one chart if I really wanted to. So the first thing to kind of incorporate is going to be the candlesticks. And so the first one we're going to look at is the hammer pattern. And the important thing about the hammer, you want to be looking for this specific candlestick pattern in an uptrend. If you're trying to, pick a bottom, you may get a hammer at the bottom, but what you don't want to be doing is trying to get long in a downtrend. You want to be, just as Price was saying in the last presentation, going with the trend. And so looking for things like double bottoms, uptrends, the context of the bigger picture before you start looking for those hammer patterns is where you want to start. And then on the flip side, if the market is in a downtrend, that's where you can be looking for the inverted hammer. And a cool little hack is if you are on Thinkorswim, if you're looking at a chart, if you just type in the ticker symbol box minus and then your chart, so like minus SPY or minus ES, it will flip that chart upside down. So if you want practice with both ways, you can look at the chart and mark it up, and then flip it upside down and do the same thing for finding longs versus shorts. So with a short setup or an inverted hammer, looking for things like double tops, downtrends, double chops, triple tops, things like that. But the hammer and the inverted hammer are really, really beneficial because what they're signaling is price rejection. So when you have a hammer candlestick, or in this case, since it's on the chart, an inverted hammer, price goes up and then it's rejected and then it comes all the way back down, kind of in that bottom third of the candlestick, compared to a big body candle like the candle after the inverted hammer here is the big red bar, where price opens up and it's just sold all the way down and closes near the low. So the hammer and the inverted hammer show that price went up to a new high and then it was rejected and fell back down. So coming out of the inverted hammer, you can expect momentum to the downside, and coming out of the hammer, you can expect momentum to the upside. And so I just kind of coined that high of low bar or low of high bar, which just means when you break, in the case of a hammer, the high price of that bar, and the low bar part is the hammer is the lowest bar in the pullback, so the highest price of the lowest bar in the pullback. So the market is kind of moving down temporarily. The larger trend is up. It pulls back, looking to get long above the high price of the lowest bar in the pullback. When it's a hammer like this, is the kind of signal bar, if you will, that we're looking for. So high price, lowest bar in the pullback, and looking for it to be a hammer. And if you flip that upside down, the low of the high bar is simply looking for the low price to break of the candle that is the highest bar in the bounce or the pullback. So when we're in a bigger downtrend, maybe you might look at a 5 or a 15-minute chart, or just kind of zoom out to get a bigger picture of what's the larger trend. And when you make a bounce and then you break the low price of that inverted hammer, that is essentially your signal for taking a short and going with the momentum to the downside. The initial stop placement that I like to use on these types of trades. So if I back up just for a moment, looking to get into these types of trades, I'm using a very simple buy stop and sell stop. So if I'm looking to go short on the trade ladder or the dome, I'm just putting, essentially a sell order on the right column that is one tick below the inverted hammer's low. And for a long, I'm putting on the left side one tick above that hammer's long, that hammer's high. And then the initial stop, the starting place that I use is going to be, if it's a hammer, just below the low, and if it's a inverted hammer, just above the high. So in this example here, the high of the candle, since it's a long, is going to be the entry, and then the low of the candle, or one tick below the low, I should say, is where I start with my stop. And this note about reasonable candle size, sometimes you get candles that are super big, like relative to the last couple of candles or the last, hour of candles, they might be, for a 1 minute chart on the ES, might be 2, 3, maybe 4 points. In this current volatility, that's about what we've seen. And so if all of a sudden you get an 8-point hammer, that's going to be pretty big. I don't really want to risk 8 points when the candles preceding it were all 2 or 3 points. So I want a entry candle to be a reasonable size as it relates to the those prior bars. And when you get that pullback, like I said, going long above the high of the low bar in the pullback and just putting the stop below the low. Now that low essentially is becoming the swing low when the candle breaks out. So if you, great exercise is to print out like a 5-minute chart of the regular trading hours for the ES or the NQ or whatever market you're trading, and just go through and mark up the highs and lows as they relate to the prior swing highs and swing lows. And then you can start to kind of paint the picture of, is there a trend? Is it up, down? Is there no trend? Are we just kind of going sideways? Are we in some sort of triangle where you're getting tighter and tighter? Are you in a widening formation where you're getting wider and wider? And those kind of exercises I find are really helpful, and just printing them out and highlighting them up old school on 8.5 by 11 paper is really beneficial. So the inverted hammer, you're selling below, one tick below the low of that inverted hammer, and then your stop is one tick above the high. Then once I get in these trades, I like to trail my stop rather than just have a fixed target, because you never know, when the trade that you're in is going to be a big runner or just a short move. And so what I like to do is trail swing highs and swing lows. And I put together this little graphic to kind of talk about where the stop gets moved when. So if we start down at the bottom, if this red candle is our entry candle and we're getting long above the high, and the initial stop is one tick below the low of that candle, we need to wait for the market to make a new high and pull back and then make another new high. So it needs to break that swing high in order to solidify on the chart here where it says pullback with the up arrow. that pullback doesn't become the swing low until that candle kind of, the next candle makes a new high, because you can pull back and pull back and pull back, and you kind of need to return to new highs. That swing high needs to get taken out, and that's when I move the stop. So if you've traded the ES for, even just one day, you'll probably experience that after your entry is like when the trade is the slowest or the most choppy. Once it gets away from your entry, then it's much easier to manage. So if you're really tight to, or really quick to tighten your stop, it becomes, you get taken out right away, and, trades running and you're not in it. So it's really important to have the patience to wait for the pullback and make the new high before moving your stop. And the other thing that you can do is trailing each bar. And I will do this after we've made 4 consecutive candles in a row that break out of each other. So if I'm long, it'd be 4 green candles or open candles, and if I'm short, it'd be 4 red candles. And so waiting for 4 candles to form ensures that, okay, it's got some momentum, it's starting to go, kind of straight up, if you will. And after that 4th candle, then I'll come in and just trail each candle's low if I'm long until I get taken out. And if I'm short, I'll trail each candle's high. But you got to wait for 4 candles to like breakout, 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 and it starts to lift off. And now it's well away from your entry prices. You have a nice profit on the trade, and now you can come in and start tightening your stop. And that allows you to be patient at the start, but then if you're 10 points of profit in the trade, I don't want that to come all the way back and stop me out. So that gives me an opportunity to come in and bring the stop up underneath each candle. So, for a long entry, if I get in the trade and then you get, 4 candles right away that go up after that 4th candle, you can just tighten your stop and wait, just keep bringing it up under each of the next candle until it changes direction, the momentum shifts, and then boom, you get out, and you're kind of out at the earliest place as the momentum is starting to change direction. Sometimes you get like double tops where you have a prior high, and then you get this little inverted hammer that's 10, 15 minutes later, it makes a double top. And so those are really good places to kind of add some additional validation to the short setup. You're selling 1 tick below the low, stop 1 tick above the high, and then if it starts to drop really quickly, same thing, wait for that 4th bar to break the prior candle's low, and then just get aggressive with the trail stop and keep going. Every minute you're basically putting your stop 1 tick above the prior candle's high until you get taken out. And so those types of trade management, trail stop approaches are really, really helpful, because a lot of people plan for, okay, this is going to be my position size. I'm going to risk X percentage of my account, which percentages aren't super great way to, build a position size with futures because you have so much leverage. But that being aside, it's really helpful to have an exit approach for what am I going to do if the trade goes my way. That way, you're not just sitting there like, oh my gosh, the trade just dropped 6 points and I'm just going to hit the flatten button, or I'm just going to try to do something on the fly, and then you click the wrong button and now you're short and now it's going against you. And so having that plan ahead of time is the best thing you can do. There's enough chaos at times, especially when the market gets moving quickly, that you want to be able to have a plan for kind of every scenario that could happen, at least that you can think of. So to kind of summarize the entry management and the stop stuff, looking for those hammers to go long, and you can look for like the halfway back of the day, double tops, double bottoms, top and bottom, or the high and low of the first 30 minutes are good places as well. You can use like a 21 exponential moving average. Those are all good places to look for hammers and inverted hammer, in this case, hammers for the double bottom, and then a halfway back long. low nicey tick. I'm not going to get into the nicey tick today, but that's another place to look for a hammer. And if you flip that upside down, looking for an inverted hammer to go short at a halfway back short, you guessed it, a double top, the 21 EMA, and then a high nicey tick as well. And those are all places to be looking for shorts. And then once you place the trade, you can use a bracket order and then just have your stop set to like 3 points. And then as soon as it fills you can adjust it so that your stop is, if you're long, just below, 1 tick below the hammer. And then if you're short, 1 tick above the hammer. So that's usually how I set it up. Just a arbitrary stop of 3 points. As soon as it fills me, then I just adjust it to the outside of that entry candle. And then when it comes to trailing the stop, again, whether you're using the 1 minute chart, 5 minute chart, daily charts, you can use the same approach of trailing swings. And then after 4 consecutive bars, that's when you could come in and get more aggressive with it. And then you can trail each candle to kind of lock in profit quicker as the market's really starting to rip. That's something that works really well on daily bars. Or in the case of like Bitcoin right now, just trailing the weekly candle. You just keep doing that until it reaches wherever it's going to stop. So that's kind of the 1 minute strategy in a nutshell, if you will, at least enough to get you going and some ideas that you could maybe apply to your existing trading. I do a live trading each week on Tuesdays. The link for that is up there. And I also do some weekly recaps and have my trade log where I kind of post all my trades and things like that. So you can kind of compare and ask questions. And the last year and a half, we've started a Discord chat room that has been a nice way to kind of share charts and have some discussion throughout the week. And the whole goal around the EminiMind website now is just to kind of help put you on a path to becoming profitable and to do it on your own. So I've got tons of free stuff up there, videos and various articles and things like that I've put together that I find helpful and have helped a lot of other traders. And the objective is not to be dependent on someone else to make your trading decisions for you. It's to build that mindset, hence the EminiMind, to be able to think for yourself, have a solid trading plan that you can be confident in when you're placing a trade. You're not sitting there wishy-washy. Is it an entry? Is it not? Should I take the trade? Should I not? And so you can, people will tune in for the live sessions and do that for a couple of months or a year, and then feel confident to trade on their own. And that makes me super happy to have other people kind of learning and being able to grow, and it gives me a little bit of interaction with other traders as well, because like I said, it's a pretty individual endeavor. So hope you're able to take a couple of nuggets out of that that bit of material. If you have other questions, you can shoot me an email, tim@eminimind.com, or if you just want to say hi or chat about anything, feel free. My email's there on the screen. And thanks, Dave, for inviting me back to do another presentation. I hope you all have a great rest of your day.